There is no funding winter for good companies. India is unique in the sense that it actually converts capital to revenue.
India is very well positioned for the next decade to drive global growth.
There certainly has never been a better time to invest in India.
Tell us something about the Xponentia Capital. The first close has already been made. What is the corpus of funds you will raise, and what exactly are you looking at? The timeline, in terms of timeline. When are you closing the fund?
So Xponentia Capital is a 5-year-old firm. We did our Fund 1 in 2019. That is a 350 crore fund. We are currently raising our Fund 2, for which we did a first close at 356 crores last year in June.
Yes.
Okay, and we are about to do our final close. And fingers crossed, we are hoping to cross 1,000 crores.
How many companies have you invested in so far this year?
See, in Fund 1, we made 8 investments. Fund 2, so far, we have made 4 investments. Okay, and out of them, 2 happened this year, 2 happened last year.
So I see a little bit of a slump there in terms of deal volume. Are you basically re-strategizing the way you used to look at the companies in the growth stage, right? Because of the funding winter going on, is there a re-strategy, a relook at basically the deals you want to invest in?
We are a growth investor. So we are what we call a mid-market investor. So we invest, companies that have gone past the proof of concept stage. Okay, their business model that is working, unit economics is visible. Okay, and they want to scale up. Those are the kind of companies we invest in. Okay, so unlike the early stage market, we really didn't have a summer. Okay, so we are not exactly going through a winter now. Okay, it is the same temperature that it was last 2 years. Okay, see, we typically try to do 4 deals a year. Okay, and we are halfway through the year. I've done 2 deals already. Okay, and hopefully we'll do 2 more deals for the current year. We don't believe in doing market share. Okay, we want to do 4 transactions that we like, which fit our fund criteria. Okay, and if you're able to find them every year, 4 deals, we're happy.
Yes, and in terms of industries, in terms of the verticals.
Look, Xponentia is set up by a bunch of city bankers. Okay, so I have been in private equity venture capital from 92. I've been at it for 30 years. Okay, and what has worked for me in the last 30 years is what I'm trying to do. Okay, so we invest a lot in financial services. We do some consumer deals. We also do some healthcare deals. And we are open to doing stuff outside these sectors from time to time. So in my portfolio, I have a EV company, Altigreen. It's a Bangalore-based company that makes 3-wheeler autos, okay, electric vehicles. Okay, so we have one company that doesn't fit any of the sector that I talked about. Okay, so we do opportunistically do things like that, but bulk of our portfolio will be in financial services, consumer, and healthcare.
Right now, there is a standoff between the government when it comes to regulations, and then there are fintech companies basically struggling to comply with the regulations. So there are a lot of business pivots also happening in some fintech companies. They're trying to basically align with what the regulations are saying now. So in terms of these emerging regulations, sir, how do you see?
See, regulatory arbitrage cannot be a sustainable business strategy. Okay. So I think that regulatory arbitrage, whatever was available, that has been plucked. Okay. Now you can argue that maybe the regulator should have allowed the sector to become bigger before coming down like this. That's an argument you can have. Okay. And maybe the regulator didn't wait for the sector to become bigger. Okay. But that's what it is. Okay. And that's how India works. Okay. So regulatory arbitrage is not there. Okay. I think what is challenging the fintech model today is that everybody who wanted to do service is also looking at balance sheet now. Okay, people want to do lending because that's the only place where money is being made. Okay, people are not seeing how to make money on fees. Okay, and I think that is the challenge and the opportunity in front of the companies. Companies that can figure out how to create a niche where the large banks or the small NBFCs, they want your service. Okay, and they're willing to pay for it. If you can figure that out, okay, then there is a lot of opportunity. But what is disheartening is that everybody thinks that I'm not able to do it, so I'm going to do lending. So I don't know. Let's see how things
But
play
sir,
out.
don't all the companies, that seems to be the trend really, pivot to lending? That seems to be the safest route. So other than that, what other sources of revenue do you think the fintech firms can tap into? There's insurance.
Yes, there are insurance opportunities, but you have to understand this. I'm a growth investor. Okay, I'm not an entrepreneur. Okay, if I know what is to be done, I'll become an entrepreneur. Okay, and I think I look to the VC startup early stage investors to figure out which entrepreneur has got the bright spark. Okay, and if they back somebody like that and they bring them to scale, okay, then I'm interested in giving money to scale them.
In terms of growth stage and late stage companies, I wanted to talk about this issue of corporate governance, which has certainly become, a debatable topic, if I may say so. Investors are talking about it, founders are talking about it. So, what is your take on this? Are you talking to your portfolio companies, the founders there, and regularly engaging with them when it comes to irregularities or governance issues?
Okay, I mean, at mid stage, we don't see this problem that much. Okay, look, this is two sides of the same coin, right? On the one side, you are seeing these companies make multiple rounds of funding. Okay, every 6 months they raise money. Okay, now if a company raises money every 6 months, it's easy to hide stuff. Okay, new money helps you hide old mistakes. Okay, so if as long as this kind of thing happens where you have Series E, Series F, I even recently saw a Series H transaction. Okay, now when you have these kind of multiple rounds, okay, and higher prices, and expectations of numbers being delivered baked into the valuation rounds. Okay, I mean, I would say that the industry has to take part of the blame and the promoters have to take part of the blame because there will be a few bad apples who will do wrong things. Okay, and the bad apples, of course, the stench from the bad apples is more visible. There are a lot of good entrepreneurs who are struggling and trying to make hard. Okay, but that is not getting noticed. It will not get noticed. I'm not saying it is anybody's fault. Okay, so every time there's a down cycle, some skeletons will fall out of the cupboard. Okay, this is nothing new. This will happen, it will go off.
Sure, sure, but you're still very, very bullish on the fintech, the consumer tech sector, right?
Yes.
Despite
So,
all the
we don't
negative.
see any problem in deploying the capital that we have raised. Okay, we have a lot of deal flow. Okay, we have a lot of opportunity, and we also have mature entrepreneurs who understand that it is better to take money from an investor where your expectations are aligned. When I meet an entrepreneur, I tell him, look, you tell me how you want to manage risk. Okay, I will tell you whether I like it. If I like the way you manage risk, I will invest, and I will tell you what value at which I'm willing to invest.
So, are you a fan of patient capital? That seems to be the buzzword, certainly, that, will wait it out and not take the sudden exits, which seem to be the trend. So, are you a fan of that wait it out, and be a part of the company's growth story?
See, if there are problems specific to the company or problems specific to the sector, okay, and we have to then wait for the right time to monetize. Okay, so I'm fully aligned with that. Okay, it is not a buzzword. That's what I've done for 30 years. Okay, and that's what I hope to do for the next 10, 15 years when I'm working on this. But it cannot be a license for doing wrong things. Okay. So I think if that kind of a thing happens, then we'll have to act to protect our investors. See, we are managing third party money. We have responsibilities. Okay. So he's my client. Please understand, the guy who invests in my fund, he is my customer. The entrepreneur is not my customer. Okay. But I want the entrepreneur to succeed, because when the entrepreneur succeeds, we also succeed. My investors benefit.
Sure.
Okay. So that's the way we like to engage these things.